And Rob, it doesn't look like a good picture at all. We had that Japanese market falling over 10%. Our market not quite as extremely down, but still down over 2% this afternoon.
Yes, a lot of extreme selling at the moment. There are a lot of bulls in the market over the last few weeks, and this earthquake in Japan, as well as the Libya issue, has caused a lot of these people having to sell out of their positions. So as well as that just normal risk aversion coming into the markets, there's people that are very long, that have got very still geared positions that are coming out of the market. So the selling is very aggressive, and particularly in some stocks. If we take a look at CFR, they've got quite a lot of exposure. That's Richemont, a lot of exposure in Japan. They're getting hit quite hard as well.
Yeah, well, Richemont down 3.5% yesterday, down by a similar margin today, and I think about 12% of its sales come from Japan, though Japan becoming a less important market for Richemont as it focuses on the growing middle class in China, I should imagine.
Yes, obviously China is their focus area, but I think they've still got a very good annuity type of income coming from Japan, consistent revenue. The very high-end products can also be sold in Japan quite easily. So I think it's a very important market for them, and they leverage off that market to go into China. So it is an important market for them, and obviously the market has seen that as important. That's why they're down nearly 7% over 2 days.
Rob, do you think this is a short-term reaction from equity markets outside of Japan? Because in Japan, obviously, there is a lot of rebuilding. There are factories that are closed down at this stage. Outside of Japan, short-term reaction or not?
It's difficult to say. There's a lot of headwinds that will come from Japan. I think people are trying to digest how much impact it's going to have on the world markets. They are the third biggest economy in the world and virtually at the same level as China, so nearly the second biggest. And it does impact, especially on countries like Australia, who does most of the exporting into the Asia area and into Japan. So I think depending on how much flow and how much export you do with Japan and how much business you do with Japan, and people are just trying to digest this. And while they're trying to digest this, I think risk aversion is the way to go. They'd rather take out their positions in the markets, reassess it. The nuclear problem is also is a big problem at the moment. Is that reactor going to explode or not? If it doesn't, I think maybe there's a slight overreaction, but you can't be too careful.
Now, resources stocks in particular are taking a drubbing today. Rob, Billiton down by 3.5%, Anglo down by a similar margin. We have platinum shares under pressure. But looking at the mining stocks in particular, in the longer term, you'd think those companies should benefit as commodities are back in demand in Japan as they rebuild that, or the infrastructure in that country.
Yes, obviously they're going to need a lot of copper, steel, iron ore to come through into Japan to do the rebuilding. But it might take, the rebuilding might only start in, say, maybe 3 or 4 months' time. It might just take 3 or 4 months' time just to clear what has happened in Japan, just the mess, the mud, etc. So I think that the miners are getting sold off quite aggressively. If Japan can settle down relatively quickly, then maybe there is a slight oversell of stock, and you can look to pick up some stock. I think if you're not in the market at all, Anglos and Billiton at these levels are looking relatively attractive. They could come down another 20 Rand still, though, which is about another 5 to 7%, but they are looking relatively attractive. But that's if you're not in the market. If you are in the market already and you're holding Anglos from slightly higher, it's a bit more difficult to decide whether to enter the market or not. So as a newcomer into the market, not the worst levels. I think the PE on the stock exchange now on the top 40 is down to about 14.5. Historical mean is 14, so we're getting back down to that historical mean after being up at 18 earlier in the year.
Well, if you think back a month or so, we had the JSE touching an all-time high above 33,000. It's now down just above 30,000, so we have lost 10% of the markets in the last month.
Absolutely. I think the market was overshot slightly, and I think that it did need a correction. With the Japan earthquake, we've seen that correction come very quickly, and maybe it gets overdone. So I think that you could start to look maybe at 12 or 13% down. You could start to look to pick up and buy some of this market again.
Platinum miners also being hit quite sharply today. You talked about Richemont. Platinum miners, though, supplying auto catalysts to the motor industry over there. And of course, we have Toyota closing down some of its plants in the meantime. Scheduled to reopen some of them tomorrow, though. Short-term reaction from the platinum miners, because I should imagine Toyota can shift production elsewhere.
Yes, well, they'll have to ship production more into Europe, more into the States, and there'll be a bit of shipping that will have to go with that and costs. But yes, they will be able to do that production for everywhere else. But I think that the platinum miners are very geared to autocatalytic converters. So I think that the pullback in the platinum miners is correct. In the short term, it will do damage to the business and to their margins. So we'll have to wait and see how quickly that rebuild comes in Japan. But at the moment, I think the platinum miners, I would rather stay out of.
A company that probably doesn't fall on your radar, slightly smaller than out of the top 40, Metair, on its results today, looked like fantastic results for the 2010 year. It's really benefited from a pickup in vehicle production. Do you think this is a stock that has any exposure to that region?
I'll have to take a look at the numbers properly to see how much exposure they have to Japan, but they do definitely supply all the car parts to all the local producers, which is Volkswagen. Locally, they do give parts to Toyota. Whether they export those parts to Toyota, I'm not 100% sure. We'll have to take a look. But you know, the car demand has come from such a low level in South Africa, and it's picked up aggressively in the last few months. And Metair, their earnings look very good from that. But coming from a very low base, we'll have to see and take a look at one of the analyst reports to see if they've got a lot of exposure to Japan. Currently, over a very good set of results, they're still down about nearly 1%. So it looks like they do have a slight exposure into Japan.
We have that gold price retracing all the way to $1,400 an ounce, and this is a metal that was trading at the beginning of last week at about $1,440 an ounce. Is this what you would have expected from the gold price, given the safe haven attributes we usually give to this metal?
Yes, I think the safe haven attributes are still there. I think people are putting money in for that. But I think that the sell-off in the equity markets has been quite aggressive. I think people have to sell their gold holdings and their profits in gold to cover the losses that they're having currently in the equity markets. Especially the Japanese invest a lot in gold as well. A lot of their holdings sometimes are in gold, and they'll need to take some of that money out of that gold to cover their equity losses. So I think that's where the weakness in the gold's coming from. It's just from people covering losses in the equity markets.
Rob, would you care to hazard a guess of where the markets are going to go from here? We, of course, have the FOMC meeting currently underway over in the United States. Do you think that could help direct the markets from here?
I think so. I think interest rates will remain low. I think that the Japanese bank is going to flood in extra money into the Japanese market. For that rebuild, there's going to still be low interest rates in Japan. I think the carry trades will come back onto play. So very interesting times for the markets at the moment. I think another 5% down, which is quite a lot. I'll be a buyer of the markets.